Property investors are continuing to avoid buying property in Victoria in favour of the other smaller states. During the month of March, investors borrowed more money for houses in Queensland than Victoria for the first time since 2008. And in the past year, the value of lending to investors in Victoria was up 6.3%, while in Queensland, it was up by 45.3%. One of the key reasons for this change in lending is the higher taxes on property in Victoria, which makes it less attractive to invest in, particularly when you don't have to deal with these issues in Queensland and WA. And you can see in the graph above, which shows new investor lending, that the lending in New South Wales, Queensland and WA has started to trend upwards, while in Victoria it's trending down. But the higher lending in other states like WA is not surprising given prices in Western Australia have increased by over 20% in the past year. This is probably the best point to take away from this article, that the best time to be investing in locations like WA was probably a few years ago, because these markets have significantly increased over the last few years, and some suburbs have even doubled in value. Another really good point is that by the time these locations hit the media like Perth has, they've already seen a significant amount of capital growth, and the smarter investors are now taking advantage of the weakened conditions in Victoria due to the solid prospects of cash flow and capital growth over the years ahead, because the best money made in property is always over the long term. And not only are there fewer buyers, vacancy rates in Melbourne are just 1%. And the fact that many investors are deciding to sell up and leave Victoria and not invest in Victoria means it's only going to make the current rental crisis within Victoria worse. And with vacancy rates sitting at 1% in Melbourne, you can safely assume that rental prices are only going to increase across the state, which makes Melbourne an even more attractive market to get into right now.
Yeah, so I agree that the increase in taxes definitely drives investors out, which reduces the rental supply and it drives up rental prices. It should also drop property values on the flip side. And what I do like that he's saying is that when different assets hit the media, that is generally when they're at the top of their cycle. It's happened to Bitcoin a whole heap. No one talks about it when it's super low, but then when it gets high, that's normally the time to sell because it's about to crash. Get proper advice, but I still would caution investing in Victoria just because there is a huge tax implementation on land. But I would still caution investing in Victoria without proper advice. I'd personally look at other states that are on the up and coming without such high taxes, because as much as if you look at the long term, that tax is going to eat away at your profitability and your return today because it's just lost dead money.